What's up, everybody? Welcome to the Stocks channel. Today the stock market closed at another brand new all-time high, and the question now is whether we are going to melt up until we get a blow off top. So first up, let's take a look at a weekly chart of the S&P 500 SPY ETF. So let's crack open this chart and see what's going on in the stock market today. All right. So like I said, this is the weekly chart of SPY. And the thing I want to talk about today is a blow off top scenario because we're already in a blow off top scenario. And if you've never seen one before, they're very rare, but they're actually a lot of fun to trade because stocks just continue to go up and defy all odds and defy all gravity because there are just too many people trying to call tops and doubting the bull rally. So just a very quick history lesson. All last year, I spent a lot of time talking about how when we had this breakout, we were likely ending the bear market and going into a bull market. And anytime you're in a bull market, the market trends higher and continues to put higher lows and higher highs. And as you can see from this chart, that is exactly what we had on SPY. We just continued to put in higher lows and break the previous highs and put in higher highs. And that bull trend has continued all the way now into a brand new all-time high, which means we are at prices that SPY has never been at before, which means we are now in a situation where we could just blow off the top. And the keyword in blow off top is the top, because after a blow off top event, the market does top out for a while, which could be a few months or it could be longer. So I do want you to be aware that the market is trying to put in a top right now. But the question is, when is the top going to be in? And how high is the market going to go before that top is in? So one thing you know, if you followed me for any amount of time, especially during bull rallies, is I tell you, do not bother trying to call the top. Let the price action tell you when the top is in. And the number one thing I want you to pay attention to on this weekly chart is that we are in a very powerful bull trend in all-time high blue skies territory. And because we have a strong bull trend, there is no reason to believe that at any point this rally has to end. We could just continue to follow this bull trend higher and higher and higher because there's nothing that has to be rational when you're talking about the stock market. If you've been around the stock market long enough, you know there's plenty of times where it's irrational. And the saying is that the market can stay irrational longer than you can stay solvent. And if you're currently shorting this market for any amount of time and you've been shorting since we broke the all-time highs, you're probably already starting to understand that solvent part because you're sitting there wondering how long you could continue to short this bull market, not knowing how high it's going to go. Now keep in mind, when you're talking about the stock market, you can go find an echo chamber anywhere and you could go find anybody that is bearish and you can latch onto their ideas and their opinions. And in the short term, those will make you feel better about your short position and those will make you feel like you're making the right trade. But I'm here to tell you, unfortunately, that is just not the case because those people don't know what the hell is going to happen in the market. And there's nothing a single person can tell you that is going to tell you when this market has topped. And there's nothing a single person can tell you on how to properly short this bull market. It is very difficult to short a bull market, and it is very difficult to call a top, and there's going to be plenty of indicators that say we probably shouldn't be going higher, but we will continue to go higher during a blow-off top event. So if you're in the Stocks Channel Discord, there's way more information about why I believe these things and how I think they're going to play out. But I do want to give you a public service announcement right here on the YouTube channel. This is just not something you want to risk a lot of capital on if you are currently trying to short this top and try to find this top to the exact day or the exact price. So keep in mind, this blow off top scenario, we are already in it, which means at any point we could get the final bearish capitulation, and you're going to know when it happens because every bear is going to come out of the woodworks and proclaim that they have given up and they are going to quit shorting the market and they are going to finally confess that this is a strong bull market that you should not short. And it is then and only then that we are going to see any sizable correction in the stock market. So even in the short term, if we do start to pull back, we're only going to come back to the breakout of the previous all-time high, and then we're just going to continue the bull trend. So even if we started to pull back starting tomorrow, that's only a 4.5% drop before we get to the previous all-time high to test it as a higher low before we continue the bull trend. So yes, it is possible, and it's very likely at some point we will come back to test that breakout. But what I'm trying to caution you against is, how do you know it's not going to be until after we go much higher and then get a blow off top, which is going to look like exactly what I just drew. So we are in a blow off top scenario, which means what I drew could easily play out where we go all the way into the SPY 520s and 530s and possibly even higher. And then after that blow off top happens and all of the bears give up, we are going to go down faster than we went up, and it's going to look like a sort of V-top crash down, only if we get the full blow off top scenario. So I just want you all to be aware of that because I know a lot of you are digesting a lot of bearish information and a lot of bearish narratives. And you have been digesting that all of last year as well. And as you can see, we just continued to go higher even after the pullbacks and the corrections. So bull markets are very simple as long as you're objective, and they could be very difficult if you spend all of your energy and effort fighting the trend. So just very quickly, looking at the daily chart of SPY, nothing has changed. We're staying bullish above 491, and there is nothing going to change that because this is a price action channel, which means we let the price action do all the talking. And yes, I have price targets higher and I tell you where I think we're going, but that doesn't mean we can't go higher than where I'm drawing these arrows, and we already have gone higher than where I've drawn these arrows. I just continue to update them as the price action allows for it. So above 491, just stay on the bull, and if we break down below 491, just get risk off. And you are a retailer, so you have the advantage of trading like a retailer. A giant institution with hundreds of billions of dollars in the stock market cannot just liquidate their entire position overnight or at the click of a button. But you are a retail trader and you are a small fish, and you can. So trade like a small fish and be fluid like water, and if we break down below support, get risk off. But right now this is a bull trend going higher, which means you should be looking for opportunities to buy the dip at support. And if you have been doing that, as I suggested, you are absolutely crushing this market right now because as you can see, it just continues to go higher. So let the trend be your friend. I can't stress that enough. The trend is your friend. So trade in the direction of the trend and don't spend your entire energy and effort looking for areas to short this rally. At some point it's going to top, at some point it's going to pull back, but let the price action tell us when that's here. On the NASDAQ 100 triple Qs, we were up 0.19% today, and the triple Qs are just as simple as staying bullish above 428 for the price target higher above at 434 and then 437. As you can see, that's where I'm projecting, but I do believe it's possible we go straight to 440 and blast through all of these targets. And again, we're in the blow off top scenario in the triple Qs as long as we're above 428. If we break below 428, get risk off or use the risk level down here right around the support trend line between 422 and 424. Again, it doesn't matter where you manage your risk, it simply matters that you are managing a risk and your reward is bigger than your risk. That way you can remain profitable. On the Dow Jones, we were up 0.18% today, and the Dow Jones is still pushing higher with the strong bull trend and the price action above all the moving averages with the price target at 391 as long as we're above 385. So as long as we're above 385, stay bullish. And if we break down below it, then you could look for a retracement back down towards 381. And then below 381, we have the critical support at 377. And as long as we're above 377, it's bullish, meaning we could go all the way down to 377 and still continue higher. So again, even if we get a pullback, those are going to be buying opportunities. That's why you shouldn't be freaking out about the market. The market is very bullish and it wants to continue to go higher right now. On the Russell 2000 IWM ETF, we were up 1.52% today, and you could tell very clearly from the arrow that I'm expecting IWM to go higher towards 207. But I will tell you right now, we did close at a very critical resistance zone between 196 and 199. So if you want to wait for confirmation, especially after if you miss this big move, you are no longer at a low risk entry if you buy at resistance, which means as a bull, you want to see resistance breaking before you have an entry. So as a bull, you want to break 196 and then 199, and that'll confirm that we're going higher towards 203 and then 207. And if you're already in this position at the low risk entry that I suggested, just let it ride and manage your risk and up your stop loss or take profits as it continues to run higher and let time do all the work for you. If at any point we get rejected from any of this resistance and we come down and slice below this low right around 190, that is going to be a bearish rejection. And in a bearish rejection, we're looking for a retracement back down towards the low 180s. And if we break the 180s, then we're likely going down here towards 174. On the ARKK ETF, we were up 2.69% today, and we invalidated the double top, which was the double top rejection from 48 and the breakdown below the neckline at 45.8, and we never fully hit the double top price target. So this was a bear trap look on the chart, which was invalidated today by the price action breaking above 48. So we need to delete the downside projection because this is no longer a double top. And I told you above 48, we're going to be getting that bull trend, which you can tell from all the moving averages. And above 48, we're looking for the next resistance higher at 50 and then a gap fill above 52. So above 48 in the ARKK ETF, you can stay bullish, and that's your risk level to manage your risk from, or these moving averages of support right around 46.7. On the VIX, we were down 0.16% today, and the VIX is still crushing lower, and tomorrow is Friday, and the VIX typically does crush on Fridays, which could push the market even higher. And remember, as long as we have a low VIX, we have low fear, which is more indicative of a strong bull trend. On Bitcoin, we're currently up 2.3%, and Bitcoin is finally getting that bull breakout above two resistance levels at 43,500 and 44,500. And I told you on Bitcoin, it was as simple as staying bullish above 42,000. So if you're long Bitcoin, there's no reason to get out, and you can now up your risk level to about 43,300 and stay bullish as long as we're above these levels because it's likely going to 50,000 next. The next critical resistance test is up here at 47,500. On Nvidia stock, we were down 0.65% today, and we hit that price target dead on the money at 703. And as you can tell, there were profit takers at that level, and we did start to get some selling. But if you really zoom out and look at this trend, we're still above all the moving averages, and we're still in a very powerful bull trend. So if we start to break 703, then we're going higher towards the next price target just below 747. Now, if we do start to get a pullback, we need to break down below that 5 EMA, and then you're looking for support to hold anywhere between 633 and 650. On Tesla stock, we were up 1.06% today, and we have the second day in a row closing back above a rising 5 EMA, so it does look like we may not reach my price target, which is why I'm telling you currently on Tesla to stay bullish above 183. Above 183, it's possible we go straight up towards that gap fill below 207. However, we will need to break that resistance level at 197 to confirm that we're going for the gap fill, because there's still the possibility of a double top rejection right around 196 to 197. So I think Tesla right now is as simple as staying bullish above 183, because it is possible we hit a bottom and we're getting ready to rally. On Apple stock, we were down 0.58% today, and Apple is pulling back down to the moving averages of support, which needs to hold right around 188. So Apple needs to bounce immediately, otherwise it's coming back down to the breakout at 186, and if it can't hold 186, it's going to come back down towards 182 to 183. So if we break all of that support, this will look like a lower high, and it will look like we're coming lower towards 174. So jumping back over to the S&P 500, I hope you enjoyed the extra information about the blow off top scenario that we are currently now in. And during a blow off top, it is very difficult to call a top, and it's the people calling a top and shorting the market that are going to cause it to continue to go higher. So be very disciplined. If you're bearish, you're much better off being in cash rather than trying to short this market. But even if you are trying to short this market, just manage your risk and be responsible, because during an all-time high breakout, it is called a blue skies market, which means there is no real resistance because we're trading at all-time highs. Now, once we start to see evidence of resistance, that is obviously going to be high volume selling, and that is going to mark a top. And we're going to see it in the price action, so there's no reason trying to predict it or guess. So as I always tell you, the trend is your friend, and let the price action do all the talking and manage your risk around these critical levels. If you want to come crush the market with us, we are absolutely crushing the market on Bank Trade Alerts, and you can find out how to join Bank below. You get all of your buy and sell alerts directly via email and text message, and it's very simple to follow because we only trade 2 ETFs. We trade TQQQ and SQQQ, and we crush the market. If you want access to all of my intraday updates and technical analysis, then you need to be in the Stock Channel Discord server, and you can find out how to join that below as well. So thank you for watching, everybody. I hope you're crushing this market. And as always, I will see you in the next episode.